Good morning, everyone, and welcome to the European crossover webinar. And it's very well. It's not too quiet, but I'm saying is as we go into the Easter weekend, things are quieting down as far as many folks coming in over the Asian and European hours. Go on, move this. But we did get a little bit of movement here. And let's see where we stand here. Now, we did have the euro close below that 12.91 yesterday, and but we've come back. And one of the big helpers was obviously on the Chinese data. This kind of got things spurred up a little bit. Let's go and take a look at this. You know, we had closed above the 12.91, and we had not been able to do anything with it per se. And then we went and slid below it, and we talked about this yesterday. Well, it's not going to be good if it closed below. Well, when we did close, we kind of just sat there for most of the early part of the Asian session, and then we started moving up higher, and we've moved up. We're not at any kind of a breakout area. Certainly, we're still trying to push up a little bit higher, but the Chinese data is what kind of got things clipping along here. You can see here on the on the 2-hour chart, trying to push up. We're actually starting to get a little bit of we've got a little bit of a buy mode signal here, but we have a little bit of a ways to go back before we can really move something. Now, one of the big drivers yesterday, I think, or depending on how you want to look at it. Hang on a moment. Too many mouses on the desk. Was this Canadian dollar? Look how this Canadian dollar has really come off, and we do want to go in and put here with the oil market still trying to motor higher. This push in the crude oil has really knocked the wind out of the dollar CAD. Now, we do have some data later on today, and hang on a moment. I'm talking about Canadian data later today. We just came out with Italian CPI, but we do have some Canadian data later today. Canadian CPI. And like I said, this is, obviously a little bit well before then we get some UK data as well as the Eurozone HICP, but we also have on the UK data, we do have CPI and PPI. Let's move this out of the way. But this has been a huge, this is, I think you've really taken some bulls out of the box on this move. But, and we had our buy chart resistance on the dollar CAD at 34.15. And we came up as high as what was it, 34.02, or that almost 34.03. But this has got to be a big disappointment for a lot of bulls as we've continued to go on and drop lower here. And the only thing, I mean, obviously, what's going on here with crude oil is just accentuating that move here. But we do have that Canadian data out. But I think this is I would think you got some people along that said, now we're finally going to go on and break out. Now, obviously, with the dollar paring back a little bit, that's taken a little bit of the steam, but it's not like as if the dollar is completely falling apart or anything like this. So, kind of questionable here on this. How far we've gone and fallen back. We do have some support coming in at 33.08, but we do have that data coming out. Cable's relatively quiet. Now, the dollar yen did go on and pop up above 12, but we turned around and gave that up, not by a whole lot, but here we are just trying to hang here just a bit above here, 112. Obviously, the big driver was the Aussie dollar, big jump in the Aussie dollar, and we saw accompanying moves here even in the Aussie yen. Take a quick look at that before we jump into the news. And we've gotten past this 161% right here. But that Aussie data really, well, it's really also out of China, really got things going and got the Aussie clipping. Too many mouses and too many keyboards on the desk. But we had a pretty good run up in here. And another key one here is also in the euro yen. Now we're seeing the euro starting to finally advance here, but look here. And remember, we had this stretch up here we thought might make it up to 26.95. Now we got a good dip right all the way down here to this 26.21, and that was our bias chart support here. And now we're trying to make another run. We'll see what we can do up here, 26.95. Euro's starting to make a little bit of a move now. And obviously a big impact here with the sterling versus the odd. We're just about here. Look, almost here at this 161%. Maybe we'll get a little bit of pause in 80.97. That's confluence in here with this 80.97 here. Well, maybe we can come here and tag this 161. So let's go on and get into the news. New Zealand dollar, boy, did we break out here. Look at this. Big move, came back in, but I'm just saying, pretty big jump there. And also, obviously, look at the Canadian yen. Let's go move in here. And this dollar cat is under some kind of a pressure here. So let's go and take a look at the news and see where we stand now. So Portugal yesterday evening declared an energy crisis. Well, that's certainly going and pushing into this, this whole thing with the oil. Declared an energy crisis after a strike by fuel truck drivers hit the country, with at least one major airport having to resort to emergency fuel reserves and fire stations. Ports and public transport also affected, demanding better workers' rights. Fuel truck drivers started a strike on Monday, but guaranteed the operation of minimum services, a promise the socialist government said has not been kept. British inflation data for March is due at the bottom of this hour. This morning are expected to edge up close to the Bank of England's 2% target, mostly because fuel costs rose during the month. If anything, the BOE is more worried about the pressure further down the road from rising wages. Witnessed yesterday's readout showing the fastest growth in over a decade, but it's not seen moving on the interest rates given the Brexit uncertainty. Let me see. U.S. House of Representatives Nancy Pelosi is due to address the Irish Parliament today. She is leading a congressional visit to Europe and has already made headlines this week by insisting that the United States will not sign a trade deal with the UK if Brexit turns out to damage the Good Friday peace agreement signed this week 21 years ago. She will no doubt reaffirm that message today, an uncomfortable one for hard Brexiters, but most welcome in Dublin. Hosts are pinned today on China data did not disappoint, posting first quarter economic growth of 6.4%, beating forecasts. Industrial output surged 8.5% in March from a year earlier, blowing away forecasts of a 5.9% increase, and retail rose 8.7%. The effects rippled through Asian markets where shares touched their highest since July. The Aussie dollar rose to a 2-month high, but the effects are already starting to fade with China's mainland stocks back in the red, and world markets are now flat on the day. S&P futures are barely higher, and European shares are retreated as they fall in iron ore prices, pull the mining index down, offsetting those gains. Chinese data appears to confirm what many expected or suspected, that the recent data downturn is temporary and China's efforts at reflation are working. There are some hopes on the U.S. trade front, but doubts remain as to whether the strength will sustain into the second quarter and whether Europe can extend its tentative streak of better data. Policymakers speaking yesterday appeared doubtful. We'll see how much of the Eurozone's falling core inflation to 0.8 was driven by seasonal effects related to Easter and whether that reverses in April. In the UK, data should show inflation remains close to 2% in March. BOE Governor Mark Carney speaks today, as does France Villeroy de Gaulle from the Bank of France. And let's not forget Italy. We got a reminder, Italian risk yesterday when the Bank of Italy warned about a bigger than expected budget deficit, pushing bond yields to 67 basis points higher. But for the time being, Chinese data has put safe assets in the backseat. Germany's U.S. yields are at 4-week highs. The dollar index has retreated and the yen has fallen against the dollar to its lowest since December the 20th. European markets are usually tightly correlated to Chinese growth, and the euro is up a quarter point. In emerging markets, investors wait for Indonesia's election. We don't spend any time on that. Not interested in any politics here. Aussie hits a 2-month peak after steady China growth. The Australian dollar shot to a 2-month peak on Wednesday after data showed steady Chinese economic growth in the first quarter, helping Australia's currency shake off earlier losses. The Aussie was 0.2% higher at 71.90. The currency is sensitive to economic fortunes of China, Australia's biggest trading partner. China's economy grew 6.4% in the first quarter from a year earlier, and the official data showed on Wednesday above expectations, helped by a sharply higher factory production. Short positions for the Aussie had piled up yesterday on the dovish RBA, and now they appear to be reversed in the haste following the Chinese data. Australian dollar has been dogged recently by the RBA's dovish stance. On Tuesday, the Aussie took a brief hit after the RBA said it believes its cut interest rates would be appropriate should inflation stay low and unemployment trend higher. Ishizuki said while RBA has sounded dovish, actually cutting rates is not a realistic option at the moment. That, in addition, could propel the Aussie higher with those higher iron ore prices. The U.S. dollar, often a safe haven, sagged against the euro after the Chinese data eased concerns about a global economic slowdown. The single currency came under pressure on Tuesday after Reuters quoted 4 sources with direct knowledge of discussions saying ECB policymakers think the ECB's economic projections are too optimistic as economic weakness in China as trade tensions linger. The New Zealand dollar was down 0.5 to 67.27, but the Aussie bounce helped it pull back from a 3.5-month low at 66.68. Boy, I bet Blake's Aussie New Zealand is just cooking along. And let's see, we've already covered this on. I was just going to go on mention on the green shoots. It mentioned that the bund yields were at the highest in 4 weeks, so that's given a little extra juice for the euro here. So let's go on and move on to the data now. Boy, look at this Aussie just cooking along. Be just a moment. There we go. Okay, let's start here with the euro dollar. Look at this crude oil still trying to push up a little bit higher. Well, nothing's changed here in the euro dollar. The key level is still going to be 13.56. There we go. And that's where they need to get to. Now, we do have that 13.29 we had from a few days ago, and that's going to keep the market a little bit in check. But it's 13.56 where you'd be targeting to say, okay, now we're really starting to move. Or if we get above here, where are we targeting? Where would this market go to? It's going to be 13.56. So no changes there. I will say that it was good that, I mean, after getting above it and not doing anything and then closing below 1291, that really opened the door that we could have started to slide. But the euro was saved by the Chinese data or good news out of China. So we made this push up in here, and the next target would be this 1356. That's what you'd be looking at for as far as resistance. Everywhere else, especially after recovering from this 1280, we probably would potentially, we could hit some stops here, and then where would they run out of gas, or where would you see a pause? 1356. So nothing different there. Take a look here on the downside. Well, 1260, got to keep the 1260 in check if we were to slide right back down. So now let's go and move into cable. We do have data at the bottom of the hour here on the cable. Well, we all know about the pivot, and we've got that down here. And boy, this cable, it just cannot get out, cannot pick itself up. So we're looking at 2980. Remember, we've been giving this thing the benefit of the doubt, because remember, we've had 3095 all of last week. And here we are now into Wednesday, and I try to give it the benefit of the doubt at 31.52, and we'll do just that if we do trip some stops up. 31.52 would be your pause area, but you can see here is all about 29.80 as the pivot here, and you can see that's a huge pivot. So no changes here in the cable. That takes us now to the Aussie and the big driver from overnight. So we've we started moving, finally got things going here with the Aussie dollar, and at this point it'd be 72.33 we'll be looking at. Now we talked about this, where I think they would eventually want to go to would be 72.70. Look how we pumped up, but beyond the 71.84 would be the 72.70, and you can see that right there. You see that right there, 72.70. You know, I like to go with the closing bodies. So the next pause, you can see right here where they'd want to motor to would be 72.33. You know, the Aussies made a pretty nice recovery here, although it still isn't going gangbusters. I don't know. Maybe they're waiting for that elusive China, U.S.-China thing. I mean, I guess if you know, it's April right now. I don't know. Maybe it's not too early to put that on your Christmas wish list. But, you know, like I said, I don't know when that China, U.S.-China thing is ever going to come about. But this is, in the meantime, if they want to push the stops, as I mentioned, you know, quite a few people may have got short. And if you think about it, we probably should be already pushed. We should have pushed much higher on this whole dovish RBA business. They said people started to get short for a move lower. Well, if you just barely pushed them out here, then we haven't rallied that much. If you think about people that may have gotten short, maybe there's a little bit more juice. But like I said, I would have thought you would have really knocked these people out of the box, and we'd already be above 72.33. So although we responded nicely to that, it's not like as if it's been, you know, like a wow factor. A wow factor would have been, you know, we'd be up here at 72.50, 72.40. You see what I'm saying? So if they're going to try and push to, what would be the resistance? It'd be 72.33. But I would, you know, kind of keep this thing in check, is because just about the time they got bearish, it flipped around. But but right now you should be punishing those that got bearish. And you know, just going above, let's see, the peak here, just going what, about 30 pips, 30 plus pips from this closing here, isn't all that impressive. It really isn't. So we'll look, we'll go with the technical right here, 72.33. And that may make, you know what, that maybe that allows, remember we're looking at the sterling versus the Australian. We're not that far away from the 161%, which is 80.94. Maybe we get up there and we do find a little bit of a pause there. Now on the downside, let's take a look at that for support. That's what I'm saying. You would have thought that they would have really, people that got caught on the wrong side would have really be, they would have really made them cry uncle. And we popped up and we kind of dipped and we're pushing a little bit higher, but it's not as impressive as you would have thought. So where's going to be support? Support will be right there. We'll actually draw the line here. Right there. The reason I put these in pink is I only do it for my intraday is because it helps this stand out, at least for me. You see what I'm saying? So, but it's going to be 71.61. There we go. And let's go and take a look here at the Kiwi. Now I will give it the benefit here because we're pushing towards these highs. Let's take a look at the Kiwi. Boy, we took a pretty good dip. Pretty good dip here. So we had 67.25. Boy, we took a pretty good dip in here. Look at this, boy. And boy, did we get a nice little move low here. Support now is going to come in right there. You can see that 67.02. 67.02. But a nice pop back here. And resistance will still remain the same, 67.95 if we were to push up there. But this was a nice little recovery here off of that. Considering how tight Kiwi's been, so like I said, we've been trading in very, very tight ranges. So to dip down there and quickly jump back, and it was a little bit overdone to start with. So let's go on and move on now to the well, let's tell you what, let's go right now. Let's just move into the Kiwi versus the yen. And this is almost reminiscent of what we saw with the Kiwi versus the Aussie. And you can see here we came down here. I guess if you want to say test this trend line here, but very, very nice recovery, sharp recovery. Let's take a look at this on the daily. Boy, that's forming a nice little wick here if we end up closing here. Be a little bit of a hammer bottom. Would we see more follow through on this? Well, looking here for support. If we're going to go on hold in here, it would come in right there. If we're going to go and make the stand, or this is what we'd have to go and defend. Right there, 75.21, 75.21. And let's put this here. And resistance right now is going to come in right there at 75. It's actually come in right there. 75.79. 75.79, but another 30 pips if they want to push it up that high. 75.79. And let's see, let's go on and move into the dollar CAD. This was a big disappointment here for bulls. Just about the time you thought that this thing was doing very well, and we actually, when we closed up here, we were right there at that key, what we've called 33.54. It looks like they closed right there at 33.52. But this market has really pushed lower from that point on here. And let's take a look at this. We had 34.15 as our bias chart resistance here, right there, and we made it up here as high as right there, 34.03. But I think that after having such a stalwart recovery here, look at this. This was just absolutely huge. And then to end up, you're thinking, okay, now it's just a matter of time. We're pushing hard. Now, the dollar, as I mentioned earlier, the dollar index has been under a little bit of pressure. There's no doubt about that, a little bit, but not anything that I would think that would expect. Okay, let's see. We've got some data that just came out. In a moment. Here for the cable. Well, as expected, doing a little bit better than to be on the positive side. So showing the CPI, we do have and PPI here. Now we do have Eurozone at the top of the hour. Now the thoughts were is that you're going to start to go and see more pressure here, but you're not. But the cable's still paring back a bit here at this point, but still, once again, within very, very tight ranges. Let's go on and move back in here now to the dollar CAD. I mentioned we had some support here at 33.08, but this has got to be a huge disappointment for bulls here on the dollar CAD. Even if you saw, we made that run above 34 and we came back. We know how important that 33.52 is on the daily. But to lose so much, I mean, you would have thought for sure this 33.25. Well, we've made it all here, back here to 33.08. If you're short, this is a pretty good area then to take some off here, this 33.08. But we do have dollar CAD. We have Canadian data here this morning at 8:30 Eastern. How far will this pull back? Well, I tell you what, if you're a bull, you got to be very, very disappointed. And technically speaking, you'd be looking for any moves on the way back to, even up some of that position if you haven't. You have to wonder how many times will this thing recover and be sold off and they try and buy it. Now they have come back, so there's no doubt about that. But I would have thought we'd have, at least on any pullbacks, they'd make a concerted effort to defend, even like right here at the 25 area. One of the big things is obviously is crude oil. The market's still pushing higher, pushing higher. It's certainly weighing on this pair here. And so where would, if we get good Canadian data, I think you got to look down here for 32.88. 32.88 if we take that dip. That may clean out a few bulls. And on the upside, it's got to be that 33.54. We've since taken it off, but this was a huge area before, this 33.54 in the dollar CAD. Well, I took that off over the weekend because remember, we were just trading back in this range, 32.95, 33.82, back and forth. Finally, we were able to pop above it, get above this 34, only to turn around and lose this in a big way. I mean, in a very big way. Now let's go and move into the dollar peso. One of the things we talked about yesterday in the webinar was, look, this market's under a lot of pressure. Nothing is going to go unchanged. Rallies back are just going to be selling opportunities until we'd have to get above 1892 on a daily close just to get a pause, and then uh, really only a move to 1913 would say, okay, now I think we can make a bullish argument. But like I said, all the way up here, we needed a daily close above 1892 just to get a pause. And you can see here, they just use that as a selling opportunity, and they continue to put this under a ton of pressure here. I think I thought we were going to start the week with a dip down to about 1868, remember? And but we held in here, and we saw a little bit of a short covering rally. But once again, all they did was use it as an opportunity to go and get short. They even made it up here almost all the way up here to 19. So nice little smart short covering rally, but only to quickly lose that and be under a lot of pressure. So we're support now on a very short-term basis is going to be right there, 1877. Certainly this opens the door for them to go beyond that but on a short-term basis, coming in right there, we'll call it 1877.0. Resistance for right now will be right there, 1889, 1889.7. Obviously bearish. And on to the dollar yen. Well, we were able to go in and get above this 112, and then it lost its fizzle. One of the things that we talked about since the beginning of the week is there's a lot of volume between 112 and 112.50. And you can see here now, look, if you look at this, we just came right here to this little trend line here. And we've quickly backed off. Like I said, to me, I find it questionable because we got above this 1187. Why aren't they doing more with it? We should probably be about 1260 right now. And we just can't seem to be able to do much with this, even though we're above 1187. That's was an area right here. Market held that 1187, and we bounced right back. But we could come off, and in the meantime, nothing really changes here. It's going to be 1226, 1162. So no changes here in the dollar yen. Let's go to the cash dollar index. Well, I've said the jury's still out on the dollar. I think that we could still make one more high, and despite everybody trying to beat it down, it just won't go down. You see what I'm saying? So we'll see what happens here, but this market is still trying to hang on. No changes here. We've had 97.07. You can see that right there. And on the downside, 96.62. If they do break them, I'm not sure how much. Obviously, if we break it, it's probably going to worry some people, and maybe we can push beyond that. But 96.62 is still going to be right there. I mean, we're using that as our bias chart support. With that, we'll go and take a look at gold. Well, we had 1280 as our support. Finally made it past 1280, and the door's open for this move to 1267. One of the things that we're talking about is that I think that gold is, following the equities. Well, as I mentioned, if the dollar can make one more little push higher, and the way equities are holding up here near these highs, it really opens the door for us to make that move to 1267. And so we're going to use that as our support, 1267, on the potential that this thing can move lower. There is some good volume support before we get there, which is 1270, even down here. But I think that there's that possibility that we come down and we'll go right there. 1269. Let's call it 1269 for the bias chart support. Resistance is going to be right there, 1285. Boy, look at this crude oil. That's really taking the wind out of the sails in the dollar CAD. With that, we're going to move into the crosses. Well, we had 86.63 as our resistance here, but with the euro moving higher and the cable, well, not cable, but in this case sterling, weaker, it certainly has opened the door for us to move higher, and higher is exactly what it's done. Some decent volume comes in right there at 86.80, which is right where they stopped, actually. See that right there? But we are starting to break out from here. Hundred and 27% extension would come in at 86.89. Well, actually, 86.90. $86.89. And there's 86.99 here. Let's go with 86.90 for the resistance, which would be the 127% extension. Well, support's right here at this breakout area, but you can see just a hair right there to be 86.56. $86.56 for support. And let's take a look here at the euro yen. Now, we did get up here to the 78% and 26.95. We said if they goose some stops, well, they're not doing a whole lot. I mean, I thought they could have pushed higher. So 26.95 will continue to be the our resistance here. Right here, you can see that. Interesting to see, because you can see here that it looks like they just took out the stops by about what, or the highs by what, 2 pips, 3 pips. Let's see what they can do. But it's not that too impressive. On this. Because we came to 78%, and then for them to only take this out by 2 or 3 pips. Let's see how we close on this. But I've been a bit, well, here with me with the yen pairs, I've been a bit suspect to start with. But it would be the 26.95 is going to remain the same, and support for right now, intraday support. Will we find some, if they do make that dip, it's going to be 26.38. Let's go move into the euro odd. Certainly the big move overnight or during the Asian session with the Aussie pushed this market lower. Got a little bit of a medium-legged doji. And support level comes in right there with the body touches, which is 57.02. So that's exactly what we're going to go with, 57.02 for bias chart support. $57.57 for resistance. Obviously, this is key right here, this 57.40. But My thought is if the Aussie starts to give up its gains, if I'm not saying expecting some big reversal or anything, but as I said, I thought the Aussie, I'm just looking at the Aussie versus the dollar, certainly could have pushed higher. So if we start to see over the next couple of days, a move back, well, then that's where we'll be 57.57 for resistance initially. Once again, being your levels for the day into the next 24 hours. So if you were to make the case as well, look, if this thing would reverse, your real resistance come in around 58.35, yes, but on the short-term basis, if they jump back, what will we see? A little bit of a pause right there, 57.57. Let's go into the Euro Kiwi, and boy, did we see a pretty good move on this one. And boy, what a move that was. Hang on. Well, we know that the Kiwi has recovered and recovered nicely after getting chunked up pretty good. Resistance is going to come in right there, which is 68.43. You can see here there's a pause right there, 68.30, which is the body right here. But we'll go with 68.43 if we were to get that push higher. Let's say the euro decides to move even a little bit higher. Certainly doesn't look like it right now, but it'd be 68.43. Support's going to be back to this line here, level 67.39. Pretty good pullback if it does, but be 67.39. Not necessarily one for today, but if they turn around, jump right back, we're looking for 67.39. At least that's what you know where you should be. Find some support coming in. May not hit it today, but if we do go on pair back, will be for tomorrow. And let's go move into the Aussie yen. Now this one's holding up rather well, and we are above this 161%. Remember, we came up to it and we saw a pretty good little pullback. I've made another jump. Let's go and see what we stand here a little bit longer term. The next real challenge comes in right there, 80.92. Technically, it's right there, 80.91. Hang on. Yeah, right there at 80.91. So it's going to be 80.91. If we can still push a little bit higher. support comes in at 80.18. 80.18 for support. This is a nice solid close, which opens that door for a further test. Let's see what we can do if we can make it up there to that 80.91. Still trapped in a very tight range. Was starting versus the yen here. I still like this 45.94 for support, and it's holding. It's still holding here. There is some support at 46.54, but I think you got to give. If we were to push higher, this is where the real resistance comes in. 46.71. So there's no change here. No change at all. And starting versus the odd. Let's keep an eye on this one. This one's key here. Here's at 80.97, this level here, and 80.94 is 161% of this extension here. We just exceeded the 38% here. That would suggest a move almost all the way to the 50%, with the thought being you didn't get much of a bounce from the 38%. But 180, 80, 40. We've got this 80.97 here, and 80.94 is 161%. Right there. It's called 80.86. See right here? Let's call that 80.86. And 80.94 is 161%. So let's go with 80.86. Resistance doesn't come in until right this level here, 81.88. We do have Canadian data out today, and let's see how far we can push this thing. I'm going with this 84.31 being the 161%. And that comes in very nicely right here too. So I like 84.31. Support comes in right there. 83.68. And there's a bias chart for today. I'll get that posted. And thanks for joining us here on the European Crossover webinar.